Hello YouTube, it is October 7th, 2019, and I'm back to revisit a topic along with adding it on to a new topic. So, Bernie Sanders and Elizabeth Warren's wealth tax versus the marginal tax plan that I came up with at the beginning of the year. So let's go ahead and get into it by reading this article from the Newsweek. So pretty much y'all can, it's pretty self-explanatory. I'll let y'all scroll through this real quick. I'm just going to highlight some of the points of their taxes. So Bernie Sanders proposed a 1% perpetual tax on net worth over 32 million and single filers with net worths more than 16 million, affecting 180,000 households. The plan has several brackets with a 2% tax over 50 million, 3% over 250 million, 4% over 500 million, 5% over 1 billion, all the way up to 8% on net worth over 10 million. Warren's, however, is a 2% tax bracket on net worth of 50 million, as opposed to Bernie Sanders, who wants to start off at 3% on 50 million. Then it goes from 3% on anything above a billion, which University of California Berkeley economists estimate will raise 2.6 trillion in revenue over a decade from approximately 75,000 wealthy households. So then it compares how it would knock down some of the wealthy owners. But I want to pull up something real interesting that's going to get Bernie in trouble. Although I think Bernie is over for him after that heart attack scare. I think he is already safe to say that he ain't really going to be looking too favorable. See, I think this is going to get Bernie in trouble with trying to target billionaires because I think people, me personally, if you are blessed and fortunate enough to have earned yourself to a billionaire status, who is somebody such as Bernie Sanders to say that there shouldn't be a such thing as billionaires and tax you at such a rate to disqualify you? I mean, to reduce your wealth over time to get you back to millionaire status. I think that's wrong if you talk about taxing people proportionally fairly, yet you're overly taxing somebody to bring them back down to millionaire status because it gives the negative implication that all billionaires are somehow corrupt and they don't need this amount of money. But then we look at, people like Oprah Winfrey and all the things that she's done. We look at, Tyler Perry. He just came out with the studio, $250 million. Going to be having a slew of black actors. I mean, the name departments out of the studio after iconic names such as Oprah Winfrey and all of them, Cicely Tyson. The list goes on and on. And came out with his own walk now, and then he also got his walk of, the Hall of Fame star, whatever, in California, Bama, Bama. But honey, Tyler Perry said, I'm going to darn gonna come out with my own Hollywood Walk of Fame in the A, baby, in the Georgia Peach for my darn gone black brothers and sisters. So you're going to penalize people like that because of the few corrupt apples such as the David Coates and the Soros and all of them? I think that's rather fucked up and twisted. I mean, then you already got Warren Buffett and uh, Bill Gates and them already promising to give out over half their worth. They over there, helping Africa. And, we'll get into that with a whole nother video. But from their perspective, at least they're calling themselves helping out Africa, honey. But they donate already half their worth. And here you is want to darn gonna still target them. So yeah, I'm not really a fan of Bernie Sanders on that one. Also, the other thing that I find problematic is who is going to come up with the account for their net worth every year, because it's like a wealth tax is not the same as actual assets per se, as far as tangible money. And let me give an example of that. Like Uber, for example, is worth how many billions? But actual raw cash value on hand, you'd be surprised that they only got maybe about 10 to 15 million in in raw cash income. But their future perpetual worth makes them worth the billions and billions of dollars that they are now, if that makes sense. I remember, matter of fact, at any given time, Lyft and Uber can be in the hole, but if they're taxed based off of their wealth, their perceived net worth, how in the world do you go by collecting the money off of something like that? And as far as individuals such as Bill Gates, all the way down to your Beyonce's, how in the world do we supposed to come up with a perpetual tally of everything? So now we got to count every darn on bodysuit that Beyonce has, because them darn on leotards and bodysuits cost a cute coin. That adds to the net worth. We're going to have to add into account every heel she owns, all six of the houses, everything that's in the house, the crystal chandeliers and everything else. The tax up every year versus just taxing the actual income. I think that's far too tedious, far too complicated. Even if I mean, to go through the stress of having to account for every single thing that you own. And then it's like, what if you have income outside of the country, such as an artist? Are you going to get double taxed on that as well? I wonder how that would work. Like when the artist is touring for a certain period of months in the UK, they're actually subject to pay taxes over there in addition to the United States for when they tour over here. So is we going to tax them twice on the foreign income as well? It's so many things that's confusing about this wealth tax that I can see is problematic versus, Alexandra Ocasio-Cortez, and I hope I pronounced that correctly. Y'all know I don't speak Spanish, but Alexandra Ocasio-Cortez came up with a marginal tax proposal, and I countered her tax proposal offer because and Bernie Sanders was ironically on with the tax proposal until he started going more towards this wealth tax option instead. And then he admitted on the debate stage he's going to raise the tax rates up for all the American citizens. So yeah, a lot of flip flopping and confusion for me, honey. Y'all Bernie fans, y'all darn gonna break it down for me, because like I said, I'm confused. In one breath, he was in agreement with Ocasio Cortez. Then I haven't heard Ocasio Cortez speak about Bernie anymore, and he's now mostly coming out with this wealth tax in the same way that Warren is. But Warren, I believe, is being a lot more fair and strategic. She even has an exit tax for people who will leave the country, a still 40% tax for people who will try to leave the country, versus Bernie Sanders. I haven't seen that he had an exit tax for anybody that would just renounce their citizenship and move to another country. But here's how mine stack up. So I did my video well over 9 months ago, and I compared the tax rate to mine. So here's the current marginal tax rate, and then of course this is for head of household. This is how I made mine. Now for taxable married filing separately, just minus 25% from mine, and that's what you would get for married filing separately. So for example, if you're married filing separately, instead of $100,000, it would be $75,000 starting, where you would be taxed at 30%. So to give y'all an idea of how that fares compared to the wealth tax. Number one, this is taxing your current income that you make, which is a lot more easier to, predict because you got to file your taxes every year and you account for your earnings for that year. You're not going through the whole net worth. Also, you're not perpetually being taxed on it every single year because I don't think there should really be a wealth tax because once again, that's too problematic and it's, how can I say? I feel it unjustly, target millionaires, including the good ones, such as, your Tyler Perry's, your Oprah Winfrey's, your Beyonce's, your P. Diddy's, your Jay-Z's, your Warren Buffett's, and the list just goes on and on. So let's start off with mine. So for $20 million, I believe there should just be it should be a 50% tax. So 50% tax on anything above $20 million. Then from there, 11 to 19.99, you have 45. See, this is where I want to change this on up. This is what I'm going to do right here. Let's go ahead and go to the edit because I actually want to change this on up. Because 1 to 9 million, I think that's too much of a. My thoughts gonna change on that. So originally it was 1 million to 9 million was taxed at 40%. So what I'm gonna do is make this 5 million to 9 million is going to be taxed at 40%. $1 million through so that's going to be the new rate. So 5 million to 9 million would be taxed at the 40%. 1 million to 4.99 will be taxed at the 35%, which means you are going to start noticing a 2% savings because the current one is anybody make over $500,000 is taxed at 37%. So if you're making $4 million a year, that is a $80,000 savings per year. Once again, if you're making $4 million, and that's where most, up and coming, franchises tend to fall in. I think they should be rewarded with a substantial tax break. And I think 2% is a good start in addition to providing grants and stuff for those businesses as well. But as far as the tax rate for those businesses that own like 1 or 2, 3 franchises, there should be a 2% tax break in there for them. The members of the View, I think Whoopi makes about $4 million a year, so she will receive a $80,000, check. Kelly Rowland makes approximately about 3-4 million a year, so all of them. Tracy Ellis Ross, these are all your people that would now see a 2% tax break. Now 500,000 to $999,099.99. We're now going to reduce that to, I want to say, 30%. Yep, we're going to reduce that to 30%. And how that fares is, let's see. Let's see how that fares. Matter of fact, we'll do the comparisons in a moment. So 100,000 to $499,099.99. We're going to reduce that to 25%. Now, I think this is going to raise some people's income, and I think it is. And then we got 50 to 99K. We're going to actually drop this to 15%. Keep that at 10%. And then people who make under 15K is going to be free. Free in my Dobby boy. So let's see how this now matches up. So 100 to 499K. So people who are between 100,000 to 160, 84, 100,000 to 160, 700. Y'all taxes are going to go up just 1%. But people who make well over that is actually going to notice a savings. So let's say if you are in the $300,000 tax bracket, you're going to notice, let me see, 32%. You're going to notice a substantial 7% savings. So for your doctors, some of your registered nurses and all that, a 7% savings on $300,000. So let's say 400. So let's say 400. Let's get an idea of how much that would be on 400,000. So 7% save. So you're looking at around $21,000, give or take, on savings for your doctors, your nurses, your veterinarians, and all of that, who are making upwards of over 100 who are making over 160,000. Anybody who's making 160,000 to 204,000, you will now make a 7% savings in taxes. And for people who are between $204,101 to the $499,900.99, you will actually save a whopping 10%. So 400,000, let's say, 300,000, that's $30,000 that y'all will be saving. So a lot of your nurses, doctors, and all of that will be saving upwards of $30,000 a year. That's a good retirement. Hell, 10 years, that's $300,000 in savings. So think of it like that. If you was just to put that money in savings, 10 years, that is $300,000. That is a house paid off just off of the savings that you would get underneath my marginal tax rate plan. Once again, 25% for up to $499,000 compared to the current one where it's at 35. You're already being taxed at 35% if you're making just $204,000. I don't think that's right. I think, our doctors and lawyers and all that should deserve a substantial tax break as opposed to a tax increase. Now let's go to the next bracket. So 100 to 499K, like I said, it's going to go up to a percentage for some folks, but it's going to go down as much as it's going to go down as much as 10% for a lot of people. Now for the doctors and stuff who are specialists who make over $500,000, that 500,000 to $999,099.99. That tax bracket where you're making 37% taxes, now instead you're just being taxed at 30%. So that is a 7% savings for you all as well. So the goal is reducing a majority of the people's taxes by 7%, while raising the taxes for people who are multimillionaires by increasing it to as much as 50% for people who make over $20 million. 45 for 11 to 19, 5 to 9 for 40 for people between this bracket, 35%. Once again, this is when you still notice your discounts as well. But once you hit 5 million, that's when you go above the 37% and you go into the 40% versus, this is the way that it's currently set up. And me personally, I think, why is somebody who make over $500,000 being taxed at the same rate as somebody who's making $20 million? It never made no sense to me anyway. I think these people can afford to pay more, while some of our other people need to pay a little bit less, and this should balance it on out. And for our people who make, 15 to 49K, that's still struggling income. I think poverty is like if you make 2280 a month, that's the poverty line. I know it varies every year. I think they got it where it's $12,000 a year. But hell, they got it where currently you would be paying 10% taxes. Number one, I think if you are in the poverty line, you shouldn't even be paying taxes. That's why I say $0 to $15,000 is free. So anybody who is in college and you work at McDonald's, Walmart, Target, or hotel work, any of that, I don't think they should even be subject to pay a tax. So anybody under $15,000 is free. $15,000 free. Now once you get to 15 to 49K, that's when you get taxed. But I don't think you should be getting taxed to the degree of 22%. So here's another savings. And once again, the theme is 7% savings. So for people making between $39,000 to $50,000, you're noticing a 7% savings compared to the regular tax. Because once again, here's where you're paying right now. You're paying 22% versus underneath mines, you're paying. Oh, wait a minute. That's even more. What, Lord, Ron, I'm looking at something different. I was actually looking at this. So 10% compared to 22. So that's a 12% savings. So once again, the most highest people, and the irony is it's a 12% tax rate right there. But you would be saving 12% taxes. So that's an average of, let me calculate how that'll be. So if you're making $50,000, let's see how that will work. So the first 15K is free. You're not taxed on your first 15,000. You'll be taxed on the 15 to 49. So 35,000. So that's an extra $4,200, give or take, per year. So y'all tell me, what are y'all thoughts on this? I know this was very long, a lot of back and forth, but this is my tax rate and how it compares to Ocasio-Cortez, who wanted to tax the rich by as much as 70%, Bernie Sanders, and Elizabeth Warren's tax. I think just readjusting the marginal tax rate at this rate will be far better. But y'all leave me y'all thoughts on it below. This is how I would propose it. I would propose anybody under 15K free, 15 to 49, 10%, 50 99K, 15%. Once again, that's like your teachers, your garbage men, some of your firefighters, entry level police officers. 99,000, what you getting taxed at? You already getting taxed at 24% at 99,000 versus underneath my plan, you will get taxed at 15%. So that's a 9% savings if you fall between that bracket right there. If you're making 99,000 underneath my plan, you will be saving 9% in taxes. Um, over 160K. Now, do y'all think this is too large of a jump? I don't think it's too large of a jump. I want to keep it right here. I know some people are going to be mad because you might fall in that awkward bracket where you are taxed at 24% and your tax will go up just 1% versus everybody else will be equal back down to you. So what are y'all thoughts on that for the people who fall in that tax bracket that is between 100,000 to 160 that will actually get their taxes will be raised up by 1%. 5 through 99K. Let's see if anybody in that will. Nope, y'all will see savings on that too. So it's only the people who fall between the 100 to 160,000 that would notice a tax increase. And I think in this bracket as well, let me see. 10%. Nope, 50 to 99 is 2. Nope. So that's the only bracket. Everybody else will actually be seeing some form of savings as much as 12%, 9%, 7%, but the average is about around 7% in taxes. Now, as far as how would this look if you are um married filing separately? For me, just let me go ahead and add that on as well. Married filing. So what that means is instead of $100,000 if you're married filing separately, that means it's going to be $75,000. $1,000,000 and you're married filing separately, that means $750,000. So you will still notice a significant amount of savings if you're married filing separately as well. So that applies to all of this. So 100,000 once again that's $75,000. 1,750,000 if you're married filing separately, and 15K. Y'all know I'm not good at odd numbers. Let me see how that will work out. If you married and you're both making, let's see how that works. So $11,250 if you're married and you're filing separately. That is 11,250 versus head of household. You can make up to $15,000 and you will be free. So that is it, y'all. Y'all tell me how that works out. Like, comment, share, subscribe, and I'll see y'all soon with more videos. Mwah.